Looking at the Markets with David Modell. Welcome to Looking at the Markets with David Modell. Today we have Miss Kiana Danial, also known as the Invest Diva from investdiva.com, and that link is in the description of the video. And we're going to be talking about that, as well as, we're just going to pick Miss Daniel's brain a little bit today to get some insight into her trading and investing methodologies and strategies, which you can use. Now, Miss Danial, boy, she has a long-standing history in the markets, both with Forex and stocks and trading, investing, helping people to put together a portfolio. She has been featured all over the place: CNN, Time, Wall Street Journal, Forbes, Market Watch, and now I'm very lucky to have her here with me on Looking at the Markets. Miss Danial, thank you for joining me today.
Thanks for having me.
Yeah, absolutely. Now, I wanted to get into the beginning. I want to start at the beginning. How did you first get involved in finance and investing?
In my last year of college in 2008, my college, actually undergrad, grad school, is when the markets crashed, and I got very interested in understanding what is going on with the financial crisis. I was at the time in Japan, and I didn't understand what a financial crisis meant. I didn't know who Lehman Brothers were. However, what I could hear was that the US dollar value is dropping like a rock. And I was like, well, that's interesting because, well, I'm in Japan, I have Japanese yen, and if I ever want to go to America, I probably want to buy US dollar right now. So I was kind of debating about, okay, how low is it going to go, and when is the best time to buy US dollar or convert my Japanese yen? And so I was talking about it out of nowhere to my Japanese mom, and she basically told me that one way I can take advantage of it is by trading the US dollar versus Japanese yen on the Forex market. So that is a very risky thing that she told me about, but I got very lucky, and within a month, from August to September, I put in $10,000. I made that $10,000 into another $10,000, doubled it, and I got hooked. I'm like, wow, this is cool. I'm not going to make anywhere close as this money being an engineer. So that is basically how I got very interested in finance. And after I graduated, I really decided to make a move towards finance. After a year of working in analytics, I decided to come to New York and work on Wall Street, and the rest is history.
Indeed, the rest is history. You've been reaching a lot of people on Twitter, on your website, Invest Diva, on social media. I think it's really great. Now, I wanted to talk about, before we get into your website, which we're looking at right now on the screen, just want to get a feel for what you're bullish and bearish on for the remainder of 2017.
Well, the majority, let's say, of the sectors I'm bullish on, not only for the remainder of 2017, but for the next 5 years, is that tech stocks, specifically AI, artificial intelligence, and anything that has to do with big data, the future, basically, that is what I'm investing in, not only because I believe that that is the way the humanity is moving towards, but also because the companies that are conducting these research and providing the services are doing very great. So I've been very fortunate to be able to reach to researchers who pick the best companies basically in this area. And we've been bullish, let's say, for example, in AMD, NVIDIA, for a very long time. We've been made triple percent. NVIDIA has been like 285%. And I am going to remain bullish on them, even though I have been taking some profit on some of those, but I'm looking to even get back for more. Another sector that I'm bullish on for the remainder, unfortunately, this one is not something that I'm a fan of, but it looks like that's the direction that we're going through, and that is defense industry. Because of the political direction that we're taking with North Korea and also the U.S. policies that we're seeing, it looks like that defense sector could benefit from it, specifically Lockheed Martin, Boeing, or even UTC. And so these are the two main sectors that I am going to remain bullish on. On the contrary, what I'm bearish on as things like coal industry, for example, that I don't really see a long-term future in.
Interesting, because at the beginning of the year, after the election, I remember some people were very bullish on coal. Um, Now maybe we're not feeling that way. Now that we're seeing how things are panning out or not panning out, as the case may be. I totally agree with you, by the way, on AI as well as defense. I think these are very bullish. But again, it should be noted that nothing we're saying in this video is a recommendation to buy or sell anything. I personally am not a registered or licensed investment advisor. Everybody watching this video needs to make their own decisions, of course. Now, some people are feeling that this is a market that just refuses to go down. It's either going sideways or going down. It feels a little toppy, a little frothy. Should people be hedging in some way or preparing for a market crash? What do you think?
Is that nobody will ever know and time the market crash ever right. But we have to always be prepared for a market crash nonetheless. You never know when a market crash is going to happen. A lot of people, as you mentioned as well, were thinking that after the elections, the markets might crash, and we were actually preparing for that, and it didn't happen. But the way that I hedge, and I continue to hedge, no matter what happens in the market, even with the securities that I am bullish on, is that I basically plan in advance to buy more as the market drops. That is the only way that I hedge.
Interesting. So averaging down. Yeah, and that's, if you have a long-term perspective, averaging down is a viable strategy. So you actually prefer that as opposed to some people who do stop-loss orders or buying put options, buying 100 shares of a stock or ETF and then buying a put to protect yourself. What do you think of those strategies?
So I used to do that, and I have stopped using stop losses. Not only in stocks, but even, believe it or not, in Forex, which is the king of stop losses. And over the years that I've been trading and investing, I've realized that stop losses is basically the quick way to lose all of your money. And in the long grand scheme of things, you will see that stop loss is not going to help you, and it is better to get in to buy less shares for now. For example, if you don't have the buying power at the moment to prepare for that market crash, to buy more if it does crash, than to buy a ton and set up a stop loss. So I have completely stopped using stop losses altogether.
Interesting. There are people who swear by stop losses, and there are people who say, you know what, you don't even need them. I respect both sides of that. Fantastic. Now, I like what we're looking at right now. This is investdiva.com, the home screen. How to generate $37,195 return on investment per year without sticking to your screen all the time. I like the sound of that. Not everybody has the time or the desire. Okay, me, I'm stuck to the screen all the time. But most people don't have time for that. So when people go to investdiva.com, what are they going to see?
The first page, and this one is the new homepage that we've developed. And the reason why I chose this number is because some people say, "Oh, that is so low," but I think it's a very reasonable amount for people who have a full-time job who just want to manage their money on their own. And what they're going to see is basically you can sign up. We have education here and insights here, and then I have my books over here, and then you can learn a little bit more about me on the About section. But this promise that I make over here has to do with our Make Your Money Work For You Power Course, which is on the education side. So if you go here, you'll get into a free masterclass, which I explain basically about how the methodology works. And if you're interested in learning how to do it on your own, you can enroll in our Power Course. But basically, what it is, what I teach is to people who want to manage their money on their own, but they have a full-time job, they want to do something else, and they're not day traders. So this is mainly for long-term to medium-term investors.
Absolutely. So many great choices here. So much. I mean, you got your books, your education. your insights. It's so cool. You got free content on there as well as things to offer for people who do wish to subscribe. I recommend people check out investdiva.com. The link is in the description. Now, I wanted to talk about, I've interviewed some really amazing ladies of finance. Carolyn Borodin, the Fibonacci queen, Gwen Preston, who is just a master at the precious metals and mining sector, as well as many others. And I'm glad to be speaking with you today. What can we as educators do to encourage more of the ladies to take charge of their finance?
One of the methods that I've been using to get more women involved is, well, it might sound stupid, but basically it's just getting more women involved is word of mouth. So you get one or two women involved, and then women kind of say, oh, so she's doing it, maybe I can do it. So the only way to get more women involved is to get more women involved.
Right.
I don't know if that makes sense.
It does make sense. I think it's about outreach. And just reaching out and letting people know you can do this. The ladies and the gentlemen, let them know this is something that's not scary if you know how, if you have a good mentor, if you have somebody to guide you. And I know that's what you do, and I do it as well. And as an educator, I feel this is so important. Now, I've been getting a lot of questions about the cryptocurrencies, the Bitcoin, Bitcoin Cash, Ethereum. Do you like the cryptos, and are there any particular ones that you like?
One of the methods that I am actually interested in is actually mining it. So we're setting up computers to actually mine cryptocurrencies. However, in terms of trading it, well, I have been looking at some of the cryptocurrencies, and Bitcoin is now a little bit too expensive to get in. However, the other ones, Ripple and Ethereum, they sound promising. They do have some technical indications right now. For example, this one I have versus the US dollar, actually. It's kind of, it has been picking up, and it looks like that it is on an upward trend. So I believe it was 2 months ago that we sent out a buy signal for this one, and at around here, and it's been going up, kind of up. But this, again, would be for me a little bit more of a long-term investment.
Gotcha. All right. So you do like the cryptos, but you're not a short-term. You're not trying to scalp it. You're going for the long term, which is a great perspective. Now, I want to talk about your book, Ichimoku Secrets, which is available on your website. Yeah, great book. I consider this essential reading. Now, what can you give us just a couple of secrets? Can you let the cat out of the bag a little bit today? Just give us a preview.
Absolutely. This is a very, very short book, and some people are like, oh, where are the tips? Like, okay, the secret is that very, very simple trading methodology. I'm not trying to create, this is not a novel to go through all the secrets that Ichimoku is. I give basically the preview of what Ichimoku is and how it works, and then the best methods to actually use it that, in my experience, has had the best results. And there is basically one. But you can, the beauty of Ichimoku is that if you combine it with Fibonacci, you can basically adjust it to your risk tolerance, which, in my opinion, is the most important thing. Everybody needs to know what their risk tolerance is, because your trading capacity, your investing capacity, risk tolerance, your financial situation, your goals are different than mine, and is different than the next person. So for that reason, everybody needs to create their own specific personalized investment strategy. And while that is what a lot of money managers do, if you want to take care of your own money, this is the method to go. So you first have to understand what your risk tolerance is. And by risk tolerance, I don't mean how much risk you want to take. That is your risk appetite, that is your personality, and that definitely should be considered in your risk tolerance. But also your current financial situation, your future goals, and the capacity that you can actually tolerate risk at to one point. So your family situation, your age, everything comes into count. And with that, then you can use Ichimoku to set up your buy or sell limit orders. So we have specific concrete signals based on Ichimoku. There are three. One is for lower risk tolerance, traders with lower risk tolerance. Second confirmation is for traders with medium risk tolerance. And the third confirmation is for traders with high risk tolerance. And then for taking profit, again, you can use Fibonacci to take profit again based on your risk tolerance and your financial goals. So that is what this book is about. It basically shows you which signals are right for you and how to use them.
Makes perfect sense to me. It's a book that people should be checking out. It is available on the website investdiva.com. And finally, and I know this is a broad question, but what do you look for in a good company or stock? What metrics or guidelines do you use to identify a good long position in a company or stock?
Really, generally, I think the most important thing that you have to look at when you're looking into a company is its company structure and its plans for the future and what they're doing right now and how they're different than their competitors. So for example, if you go to my insights, it's been a long time since I've shared an insight. There is a very good reason for that. I've been a little bit out of it in the past 2 months. I might as well just announce it. I'm pregnant. So.
Oh, wow. Okay. Congratulations. Okay.
Yeah, so I've been taking it easy in the past month. I'll restart again in 2 weeks. However, so what I was trying to say is that, for example, with Tesla, my analysis, the way that I look at it from the fundamental point of view is that, what their competition is doing and what their future is basically looking, how futuristic they are, what direction they're taking. And of course, I want to know, I obviously want to like that stock as well. You want to trade what you know. And so these are basically the metrics. The fundamentals are the overall company structure and the beta of the market. And then I look at the technicals to see what the market sentiment is at the moment to identify the best buy positions or buy limit orders.
Sure, makes sense. Knowing when to get in, when to get out, and looking at fundamentals. The people are so obsessed with technicals, but there's a whole other side to it, especially if you're a long-term buy and hold investor. And I know that you teach that. You've helped so many people, and I'm really excited to bring InvestDiva.com not just to the ladies, but would you agree that Invest Diva is for everybody?
Oh, absolutely. It is interesting that 80% of our students are still gentlemen, which I'm very proud of, and I'm humbled that we have a lot of men in our community who are not also, it is kind of, I find it humbling that I have a lot of men in our community who look up to our community and encourage other women as well. And it's been very, very blissful, if that is a word, actually.
Well, it is a word now. And, why not, hey, you know what? Why not bring, how about some couples? Why not husband and wife come in and learn together?
Yeah, it definitely is something that we do have. That is one of the things that I recommend the first time, because it is very interesting when you see couples. Me and my husband actually is very interesting. So he has very high risk tolerance. I am incredibly risk aware.
Right.
But we make a very good balance. And I've seen it over and over again with couples that they balance each other out. So it is a very great strategy and it actually bonds you as well to invest together as a couple.
Yeah. Totally agree. The couples that invest together stay together, right? Those who trade together stay together. So I really like what you're doing with InvestDiva.com. People should check that out. They should also check out your Twitter, which is @InvestDiva on Twitter. I noticed that you're posting quite regularly, and you've got tips on there, both on stocks, Forex, and just the macroeconomic environment in general. Go ahead and check out InvestDiva.com. Miss Danial, I know Miss Danial, I know that you're a busy lady. I can't wait to get back to trading and also to check out all the cool things on your website. I want to thank you so much for joining me today, and congratulations on your announcement.
Thank you so much.
Thank you for watching. please like, comment, and subscribe. And I'll see you next time.